What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, we will be talking about both the S&P 500 index and the S&P 500 ETF. We will perform a technical analysis on both and identify those key support and resistance levels and where do I personally see the markets going in the near future. In addition to the technical analysis, today we will also be talking about the price targets all the banks on Wall Street have put on the S&P 500. We will also talk about the 2019 numbers and what those price targets were. And then we'll dive into the 2020 numbers and what those banks think where the S&P 500 is headed remainder of 2020. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing and technical breakdowns. So this right here is going to be the chart that essentially goes over Wall Street's 2019 outlook and highlights all the price targets based on these 12 to 14 firms on Wall Street. So you can see how Bank of America Merrill Lynch put a price target of $29.50 for the S&P 500 in 2019. Barclays was sitting at 3,000, BMO at 3,000, and you guys can go along the list. CFRA at 29.75, Citigroup at 3,050, Credit Suisse at 3,025, Deutsche Bank at 3,250, Goldman sits at 3,100, and then JP Morgan 3,000, Morgan Stanley 27.50, RBC at 29.50, UBS 25.50, and Wells Fargo at 3,030. So this right here was the entire list, and based on these numbers, the average estimate was 29.83 for the S&P 500. The median estimate was sitting at 3,000. The low estimate was 25.50 and the high estimate was 32.50, and that was by Deutsche Bank. Look at where the S&P 500 actually ended the year, December 31st, 2019, which is going to be this candle right here. You guys can see December 31st, 2019, and we closed at 32.30. So we came in very close to Deutsche Bank's estimate of 32.50. So now let's jump over to the 2020 price targets and what are some of those estimates they've put on the S&P 500. So now this chart right here goes over the 2020 price targets for all these banks, and you can see how Bank of America and Barclays both shaved their S&P 500 targets. Bank of America sitting at 2,900, Barclays at 2,800, BMO suspended their price target, CFRA at 34.35, which is going to be the highest among all the firms on Wall Street. Citigroup sits at 2,900, Credit Suisse at 3,200, which is higher than their 2019 estimate. Deutsche Bank staying put at 32.50 from 2019. Goldman Sachs also cut their estimate to 3,000, JP Morgan at 3,400, Morgan Stanley 33.50, RBC 27.50, and then UBS 28.50, and then Wells Fargo finishing it off by pushing their estimate to 32.50. So based on this data right here, the lowest estimate came in by RBC Bank. You guys can see 27.50. The highest estimate was, like I already mentioned, from CFRA at 34.35. So the average estimate from all these banks sits at 3,077, and the median target is staying put at 3,000, and Deutsche Bank's estimate is also staying put at 32.50. So now if we jump over to the patterns right now, you guys can see that the median target is at 3,000, which is going to be right around this level. That essentially means a drop of close to 5.5% from its current levels, because the S&P 500 index is right now at 3169, so it was up about 80 basis points on the day, with Deutsche Bank's estimate sitting at 32.50, which is going to be the high for this candle right here on June 8th, which is an upside of close to about 1.95 to 2%. And then of course we have our all-time highs sitting at 3,400, which is going to be right around this level. So now moving forward, let's just jump over to the patterns to identify those key support and resistance levels and where do I personally see the markets going in the near future, tomorrow, on Friday, going into next week. So if you've been following up with any of my market updates, you have a really good understanding on where those levels are. But before we jump into these patterns, I want to quickly go over the put-call ratio that essentially goes over how many put options are open on the S&P 500 versus how many call options are open on the S&P 500. And we are essentially looking for a value higher or lower than 1. So if I were to highlight where that level for 1 is going to be, it's going to be right around there. And the reason I mention that is because if the pattern is essentially trading over 1, that means there's more put options open on the S&P 500, essentially meaning that the outlook on the markets is a little bit more bearish than it is bullish. And if the pattern is essentially below 1, that means there are more call options open on the market, and that essentially means the outlook is a little bit more bullish. Anywhere between 0.5 and 1 is more of a consolidation phase, and meaning that the pattern is essentially going sideways and there's a lot of indecision in the markets. So you can see how we're sitting at 0.772. That doesn't really represent much in terms of the S&P 500, but you guys can see that the first couple weeks of March we were trading at 1.25 to 1.27, and that essentially means that there were more put options open on the S&P 500 than there were call options, and the outlook was a little bit more bearish, which makes sense because we also bottomed out right around that timeline. So now we're going to jump over to the S&P 500 index, and we will go over to the 1-hour chart and identify those key levels. So as always, the 3000 level is staying put as our very clear level of support and a very clear level of demand, almost as if that the institutions are just sitting at this level to buy up S&P as soon as it approaches that level, because that's also the median price target most of the banks have put on the S&P 500. So every time it essentially approaches that level, we see a huge bounce. Last time we saw that was very recently, close to 6%. Then the pattern did pull back down to its 3140 level on July 7th, and then essentially pushed up today. And this right here is where the markets opened on July 8th, which is going to be today. So we opened, we pulled back, revalidated this support at 3130, and then pushed up close to about 3170. So moving forward for the S&P 500 index, it'll be really interesting to see where the market opens tomorrow. If you do open right around here, the next resistance is obviously going to be at 3180, and for us to see if you're able to break out of that level, which is going to be a jump of close to 37 basis points. And if you do, the next resistance sits at 3230, which is also going to be our high from June 9th. But if you do pull back, and if the market does open right around here, the next support we need to watch is obviously going to be this level at 3155 to 3150, which previously has acted as our bear camp, which we did break out of pretty significantly, pushing up all the way to 3180, then pulling back, breaking below that level, and then today we pushed up that level again. So there's definitely buyer momentum, there's definitely a lot of bullish momentum going into the markets. We just need to make sure that this old resistance now starts acting in our favor as a really good support moving forward, because this has previously acted as a really strong bear camp, because every time we did approach the 3150, we essentially got sold off close to 2%, and this right here was a much severe drop of close to 6%, but then we finally broke out of that level, we started consolidating in between that range, and then we are now trading between 3180 and 3150. So moving forward, a lot of consolidation. Here's what I'm looking forward to, and then essentially breaking out of that level, then retesting 3230, which is going to be the resistance from June 9th. So now we're going to move on to the S&P 500 ETF, ticker symbol SPY, to identify where those levels are going to be. And if you guys did watch my morning update, you had a really good understanding on where the S&P 500 was trading pre-market. I think we were pretty much flat, up just about 10 to 11 basis points, and then as soon as the markets opened, we got rejected right around the $315 level as expected, and then essentially sold off, and then towards the end it pushed up, and after hours actually was up even more, close to about 17 to 20 basis points. But again, we can extend this line moving forward at 315, because that has previously acted as really good support and also a very reasonable resistance, you guys can see back here. So now moving forward for the S&P 500 ETF, if the pattern opens in between this level, we need to make sure that we revalidate and retest 315 as our support moving forward. And if this is validated and we push up to 318 or 317 rather, we just need to make sure that we break out of that level so we can retest 323 from June 9th back on this level. So this right here is going to be our next resistance at 323 if you break out of 317, 318 levels. So in my opinion, I do see the pattern essentially pulling back, revalidating this 315, and then pushing higher, essentially breaking out of that level and pushing all the way to 323, which is where the next bear cam will be sitting at. But that being said, I wouldn't be surprised if you do see a lot of consolidation in between this range between 318 and 313, because that's essentially where the pattern has been trading more recently. You guys can see that this right here is kind of like what we're looking at, a lot of consolidation, right? So it got rejected here, gapped down, pulled back, found support, pushed up, and if it does get rejected moving forward, we're probably going to see another pullback, essentially trading between this range before we see either a breakout or a breakdown of 313. If it breaks breaks down to 313. Next support is at 310, and we continue to manage our range between 308 and 306 from my previous market updates. Again, if you guys did enjoy my quick technical breakdown on the S&P 500 index and the ETF, please make sure to give this video a thumbs up. It really helps out with the channel. Also subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.